All right, let's talk Plasm. We are officially in the final countdown. Today is day 72, which means we are just 6 days away from that huge day 78 unlock. Now, after what's been an incredibly intense couple of weeks of market stress, the big question on everyone's mind is simple. Is the protocol ready for this? Well, let's dive into the data and see what's really going on. First things first, we got to reframe these last 11 days. This wasn't just a random period of volatility or price drop. You should really think of it as a deliberate, real-world stress test of every single one of the protocol's defense mechanisms. So, the million-dollar question, did it pass the test? To answer that, we're going to completely ignore speculation and just focus on the cold, hard data. Let's see what the numbers are actually telling us about the protocol's health right now. To do that, we're going to compare where the protocol was right before the stress cycle kicked off on day 62 to where it is today on day 72. And this before and after snapshot, well, it reveals a pretty fascinating transformation. Okay, this slide right here tells a really remarkable story. Just look at every single key metric: the staking percentage, total shares, the number of tokens burned, even the USDC and the buy and burn pool. Not a single one of these defensive metrics got weaker. In fact, under some of the most intense pressure imaginable, every single one got significantly stronger. Let's break that down a bit. Staking percentage? It jumped a massive 9 points, going from 58% all the way up to 67%. That's a brand new all-time high. This signals a really powerful increase in holder conviction, with more of the supply getting locked away for the long term, right when the market was at its most fearful. And at the exact same time, we saw some massive accumulation. Total shares grew by 42%, climbing from 1.3 billion to over 1.8 billion. So what does this tell us? It tells us that while some people were selling, a much larger, more committed group of holders was actively buying and absorbing all that supply from the market. And while all that was happening, the protocol's deflationary engine just went into overdrive. The number of tokens permanently destroyed by the burn mechanism shot up by 63%. This is absolutely crucial. The protocol wasn't just defending, it was actively and permanently reducing the total supply. Now, let's zoom in on those staking numbers for a second, because this wasn't just some one-day spike. It was a consistent, unwavering trend that really forms the foundation of the protocol's strength right now. Just look at this trajectory. On day 62, as the stress started, staking was at 58%. It climbed through the price decline, it held steady through the consolidation, it absorbed the unlocks on day 71, and today, it's sitting at that new all-time high of 67%. It never once went backwards. And what does 67% actually mean? Well, it means two-thirds. Two-thirds of the entire circulating supply is locked, committed, and earning yield. This shows a level of maximum commitment from holders, and, it dramatically shrinks the portion of the supply that's even available to be sold on the open market. Okay, next up, let's look at the protocol's core economic engine. How did the burn and yield mechanisms actually perform when they were needed most? This is where that stress test gives us some of the most compelling data yet. This is a really cool concept called burn acceleration. Because the token price was lower, every single dollar that flowed into the buy and burn mechanism became way more powerful. Right now, $1 destroys 157% more plasm than it did back on day 66. The engine basically became more efficient at the exact moment when efficiency mattered most. So what about the fuel for that engine? The buy and burn USDC pool has grown every single day for 11 consecutive days. Just think for a second about what happened in those 11 days. A 50% crash, 100% bounce, sideways consolidation, and major unlocks. Through literally every market condition you can imagine, the yield just kept flowing. The takeaway here is just crystal clear. The yield engine's reliability is now proven. It is not dependent on positive price action. It functions, it delivers, and it defends no matter what the chart is doing. Now, this is where it gets really predictive. We don't actually have to guess how holders might behave on day 78. We have fresh, real-world data from the unlock that happened just yesterday on day 71 that gives us a really powerful signal. So on day 71, about 94,000 tokens were unlocked. But look at what actually happened. Only about 21,000 of those tokens were sold. The rest, a staggering 77%, were immediately restaked by their owners. That kind of behavior, it speaks volumes. So what happens if we apply that signal to day 78? I mean, the headline number, it looks intimidating. about $852,000 worth of tokens unlocking. But if a similar 77% of holders choose to restake, the actual real sell pressure the market has to absorb could be closer to something like $200,000 to $280,000. It totally transforms the perception of risk. And all of this brings us right here to the final countdown. With all this data in hand, let's look at the path for the next 6 days leading up to the main event. The next few days have some smaller unlocks, but you really want to pay close attention to day 76. In just 4 days, we're going to see a pretty significant release of over 174,000 Plasm. Think of it as our final dress rehearsal before the main event on day 78. How the protocol and the holders behave on this day will be our most important preview. So let's put it all together on a final readiness scorecard. Staking at an all-time high. Burns accelerating. The yield engine proven and reliable. Restaking behavior, we've seen it's incredibly strong. Everything points to a protocol that is defensively positioned and absolutely ready. And this really brings us to the core thesis of this whole analysis. The hardship of these last 11 days wasn't a setback. It was a forging process. The stress that was supposed to weaken the protocol has instead transformed it into something far more resilient. So, the final verdict is pretty clear. Stress made it stronger. With higher staking, more shares, accelerated burns, and a proven economic engine, the PLAZM protocol enters this final countdown to date 78 in what is its strongest recorded state ever. The countdown continues, but it continues from a position of data-backed strength. And as a final note, please remember that this content is for educational and informational purposes only. Nothing you've seen here constitutes financial advice. Always be sure to do your own research before making any investment decisions.